Good morning, XRP community. Tonight's bulletin follows a turbulent stretch for crypto and a noisy weekend of headlines. We'll cover three storylines that collided: the tariff back and forth between the United States and China, the sharp sell-off on October 10th, and the quieter but important steps around possible XRP exchange-traded funds in the US. We'll keep it simple, factual, and focused on what's known, and flag what is not. We begin with the timeline. On October 10th, major cryptocurrencies fell quickly. Prices slid across the board, order books thinned out, and losses mounted before the market steadied. In the hours that followed, social feeds filled with accusations of manipulation, insider timing, and coordinated moves. Those claims are serious. Some include screenshots of large short positions opening shortly before high-profile posts on social media. Others point to alleged holdings by public figures. At this hour, many of these assertions remain unverified. We will continue to report them as claims, not facts, unless official documents or on-chain evidence are published and confirmed. While that debate played out online, a second storyline developed. The tariff rhetoric cooled. Messages from Washington and Beijing signaled a desire to avoid an all-out trade war, even as both sides maintained a firm posture. That change in tone arrived quickly after the market turmoil. Viewers will decide whether the sequence looks routine or coordinated. Our role is to mark the tape. Harsh language into the sell-off, a softer message as equity markets prepared to reopen, and a crypto market that attempted to stabilize. Where do you stand on the 10/10 drop? Routine market stress or something more? Tell us in the comments. Your perspective shapes our follow-ups and interviews this week. Now to the third thread, one that didn't dominate headlines. Filings tied to potential US XRP ETFs continued to progress. In practice, that means amendments, updates to product language, and steps aimed at listing readiness once regulators complete their review cycles. None of this is a guarantee of an immediate launch. It does indicate that issuers are keeping documents current, a normal part of the path toward exchange-traded products. It's the quieter, procedural work that rarely trends but often matters later. There's also a scheduling note. Some economic reports and agency processes have been delayed or rescheduled in recent weeks. When official data is slow to arrive, markets tend to lean more heavily on headlines and speculation. That increases day-to-day noise. As more calendars normalize, we'll have clearer checkpoints and fewer gaps. What does all of this mean for XRP right now? First, the basic picture. After a steep slide on October 10th, XRP attempted to rebuild a foothold, trading around the upper $2 range with modest swings. Second, the narrative picture. Payments modernization continues globally. ISO 20022 remains the messaging standard many institutions are moving toward, and industry plumbing, custody, listings, and product filings keeps inching forward. Third, the political picture. The tariff storyline can flare up or cool down quickly. When it cools, markets often catch their breath. When it heats up, volatility tends to return. Back to the claims about prominent figures and trading activity. Viewers have sent us clips suggesting large crypto holdings, rapid trade timing, and even luxury purchases soon after the sell-off. We want to be clear. We will treat any such material as allegations until backed by public records or verifiable on-chain data. If those records emerge, we will review them and report what they show. Until then, please consider the distinction between a viral post and a documented fact. Here is what is confirmed. There was a sharp market decline on October 10th. Tariff language escalated and then softened. Filings associated with XRP-related exchange-traded products continued to be updated by issuers. Equity markets prepared to reopen as crypto attempted to stabilize. Those are the pieces we can state plainly today. In the coming days, we'll watch a few simple markers. Do officials maintain a measured tone on trade, or do the headlines heat up again? Do regulators offer any scheduling clarity on product reviews? And does the broader market settle into steadier trading after the shock of October 10th? As those answers emerge, we'll bring them to you without spin. Before we close, a note on our coverage. We will continue to separate what happened from what is alleged, to track policy updates that directly affect market structure, and to give you concise context when the timeline gets allowed. If official documents or agency statements change the picture, we'll lead with that. Share your view below. Was the October 10th slide a standard shakeout or something more organized? Also tell us if you want a focus segment on the ETF filing process and where it stands. Your comments guide our next briefings and interviews. Thanks for watching, and we'll see you in the next update.